Well, shares of Gap, we're watching them this morning. They're a little changed, only up about 0.75% after reporting earnings after the bell on Thursday. Gap beating on earnings per share, but reported a sales decline across all brands in the second quarter, down 8% from the year prior to about $3.5 billion. In a call with analysts, CFO Katrina O'Connell warned of a choppy consumer market, saying the company would be prudent in planning for the months ahead. The company anticipates a drop in revenue for the upcoming quarter, with net sales decreasing in the low double-digit percentage range. The company's new CEO, former Mattel executive Richard Dickson, he stepped into his new role just on Tuesday. He was on the call. He didn't have a lot of specifics to offer on the call, but that makes sense considering he's only been in the job for about 3 days. But I think a lot of these numbers just show the challenge that is ahead of him. He talked about reigniting and reinvigorating Gap's brands, but how he's going to do that, I think, remains the question.
Yeah, and if there's anything that we can perhaps extrapolate from his time at Mattel and perhaps annex that or kind of use the transitive property, bring that over to Gap, you could see more collaborations. Of course, Gap had tried that. They tried that with Kanye West or Ye. That didn't necessarily work. You tried that with a few other kind of instances. And for Gap as a whole, of course, you've got the different subsidiaries, and Old Navy really has been the company that had put the team on its back for so long, to the point where at one point they were looking to spin off Old Navy into its own business. And so now you look across some of these other brands. Banana Republic had a pretty good year to this point, at least, as it seemed people were perhaps gearing up to get back into some of those in-person capacities, whether that be at work or at school. Athleta has also been interesting in tracking how they're competing with some of the other athleisure plays. I believe we were just talking about it in our newsroom, and some of the fanfare was certainly permeating within there a few days ago. But at the same time, you look across some of the results that came out in this quarter. Total company net sales, there was a foreign exchange headwind, but including those factors, total company net sales would have been down by about 5%. Comp sales were down 6% in the quarter, but they did say, in spite of the sales declines, they're reporting that all 4 of their brands gained or maintained market share during the second quarter, with particular strength in the women's category. So we'll see.
Yeah, I thought that was interesting. And Katrina O'Connell, again, the CFO, was also asked how things have gone over the past couple of months. Did she see any kind of improvement? And she did say there was some improvement. On the conference call, she talked about that, especially in Gap and Old Navy. She said back to school is going okay also. So that's something that's perhaps a little bit more encouraging. And she also said she is watchful of the trend of student loan repayment, which she said would primarily affect customers of Old Navy. I think, the question here is, Old Navy in particular, since it does target a lower income consumer, are those people just not buying? Because they're not trading. What do you trade down to from an Old Navy, right? So I guess that is the question here. They're maybe not buying as much apparel in this environment. Something else that stood out to me from the call as Richard Dickson settles into his role, and by the way, he's not the only new person at the company. Remember, Athleta has a new head, a former executive from Alo Yoga. Thank you. I always get that wrong. Chris Blakesley is the new guy coming in there. But Dickson sort of emphasizing the size and scope of Gap. I mean, it's still a huge company. They have 90,000 employees at the company, and they sell through 900 million units a year. So 900 million pieces of clothing or whatever it is that they're, apparel and pieces that they're selling.
It'll be interesting to see what he does on the storefront side, too. The company ended the quarter with 3,456 store locations. You think about the
They've been shrinking it.
Yeah, they have. And you think about the annexation that this company has had to the mall and the prominence of the mall for the past, 15, 20 years, if not more, and how many of us growing up had been able to walk into a Gap or a Banana Republic or, one of their owned entities or an Old Navy within a mall experience. But now that foot traffic is changing elsewhere, and there is more of a mix shift to go directly online for a lot of consumers, at least to initiate their search or to get inspiration. If some of those stores, you see that continue to shrink, where they might reposition other stores and perhaps even shrink some of the square footage that they operate too, which is something that we've heard over the course of this earnings season, even as we were listening to some of the results from a company in Macy's as well, how they're looking at, for many of these mall annexed or mall known type of pillars for many years, where they're going to look to some of those smaller locations to really make sure that they're still having that consumer touch point. Get in, feel the clothes, put them on, try it on, whatever, see if you like it, walk out with it, great. If not, then you can have another type of realm where you spend more into that digital and that direct to consumer as well.